Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
Eric, it's the time of the year where everybody gets crazy costumes for Halloween. And we have this annual tradition of sorts on Trillions where we talk about the ETF graveyard every time this time of year rolls around.
We do. It feels right, and it's also good to look at what didn't work and do a post-mortem. Why did something not last? Sometimes these are shockers, and sometimes these are totally expected. And some you just don't even notice. You know, they just fade into oblivion, and you next thing you know, you're on your team chat, and you're like, what in the hell happened to this? And you pull it up, and it's liquidated. And that happens all the time, Joel. So this year, there's about 150 liquidations, which would already make it the third biggest year of liquidations. It's only got, still got a shot to be the second and possibly the record. But we're in launches, this is crushing the record. So the gap between launches and liquidations is actually pretty wide. Sometimes that gap shrinks when the market's really rough because there's more liquidations, less launches. But I think that gap being wide also points to how great the markets are. Everything's up. Gold, Bitcoin, stocks, bonds, name it. You know, it's having a good year. So which tells me if you close this year, you must really be sucking wind. You know what I mean?
All right. So to help us take a tour of this year's...
If you close this year, you have major issues.
It's a spooky laugh there from Eric.
Yeah.
Okay, so to help us take a tour of this year's ETF graveyard, we're joined by Vildana Hajric, a cross-asset reporter with Bloomberg News, Todd Rosenbluth, an ETF analyst with VettaFi, and Athanasios Serifagis, an ETF analyst with Bloomberg Intelligence. This time on Trillions, the ETF graveyard. Todd, Vildana, Athanasios, welcome back to Trillions.
Thanks for having us.
Thanks for having us.
Nice to see you guys.
Okay, Eric, very high level. Were there any big takeaways other than the numbers that jumped out to you? What about themes or issuers or anything else specific?
You know, I was looking through the closures, and it was just so much variety. If there was one thing that I was shocked to see so much of, it was international, which kind of makes sense because of all the things I said doing so well, one thing that isn't doing great is international. It's okay, but some countries have really just been struggling for this whole in the U.S. everything's so wonderful and bullish, but not every country's like that. So there were a good degree of international ones. Definitely some sustainable ESG, as we predicted before. It was cool. And then some thematic ETFs, work from home, that kind of stuff that, already feels kind of dated. That's generally what I found in here. But, you look through here, there's much more than that. But a very diverse group of ETFs here. I suppose one common thread would be that most of them would be very tiny allocations in your portfolio. None of these are big vanilla stuff.
All right. Todd, you brought some candy.
I did. Thank you.
There's a candy pack on the table. We're going to be very careful not to touch too much of the candy pack, but it's a combo of Kit Kat, Twizzlers, Reese's, and Hershey. Vildana, how do you feel about this selection of chocolate that Todd brought?
I'm not thrilled with it.
Well, I guess it's candy. It's more than chocolate. What's the high?
Twizzlers are no good.
Oh.
They're the same category for me as Swedish Fish, which I think are
not so into this. Okay,
No.
So there's something about red chewy stuff that you don't like.
Let's say you're
gummy.
trick-or-treating. You go to his house. He shows you this basket full of that. You're allowed to pick. Do you just walk away?
Yeah,
Okay.
for sure.
I
You're
like
like,
that.
no thanks.
And then what would you say if that happened?
I would say if you invite me someplace, I'm going to bring a present, and you don't insult the present that shows up
That's
in
true.
front of the
You're going to get a
person.
lecture.
Yeah.
When you
I'm in
walk
trouble.
away, and when I walk back out of the Bloomberg office, thanks for hosting me, you can then talk about the candy all you want. I'm going to have the Reese's because those are delicious.
Okay.
The Kit Kat is not bad.
Okay. All right. So there may be some candy that we bestow during this round. Todd, do you have a couple ETFs off of this year's list that you'd like to discuss?
Well, I like that Eric front ran this by naming one of them, so I'm not going to use that work from home ETF that was on my list because
let's
he
do it.
already
It's okay.
he already covered that. So since I think I only get a couple of bites at the Kit Kat, I'm not going to waste it on that. So I'm going to group a couple of them together if I can. I think there were 3 cannabis ETFs that closed: Global X Cannabis POTX, the Axis Cannabis ETF THCX, and Subversive Cannabis ETF, which I think just launched a year beforehand or just came to market, LGLZ. We saw a hope with MJ when it converted, and we saw advisor shares have success with cannabis thematic ETFs. And then we had 8 or 9 of them relatively quickly. Now we have a lot fewer because they're in the graveyard, those cannabis ETFs. So MSOS is still about $1 billion, I think roughly 900 million in assets. So there is a leader clearly in this space, but 3 ETFs just didn't make the cut.
So you think that speaks to there was just saturation, and now we're to a point where the winners have emerged and the losers are packing up?
Yes, I think there's a race to get into an ETF space and try to differentiate, certainly in the thematic world, all taking a slightly different approach. And then the market decides a couple of years later who's going to make it work and who's not going to make it work. And three thematic ETFs, 3 cannabis ETFs didn't survive this year.
I would say that some of these were real late. You know, if you're in a tiny category and you're like 3rd or 4th, you got a shot. But if you're like 11th or 12th, unless you are bringing something really novel, I mean, even iShares will struggle at that rate. It's just, the pond is just too small. There's only like 3 fish in there. You can't be like the 8th fisherman. It's just too little. So too little, too late. Dollar short, day late.
Okay, Todd, I think that's a really interesting observation. What other observations did you muster?
Yeah, I guess I'll stick on the international theme that Eric talked about. Again, Global X, they stand out as, first of all, as a firm that closed a number of funds. They, I guess finally is the word I would use, closed their Chinese sector suite of products. So there was the Global X China Infotech ETF, CHIK, the Global X China Financials ETF, CHIX, and I think 6 or 7 other ones. I didn't write them all down or type them all down here. Sector investing is very popular in the United States. The Sector Spiders, the Vanguard suite of products. It's not popular investing outside the United States. So China was out of favor in general, but slicing up the Chinese market in individual sectors, I don't think that ever took off, and Global X finally decided they were going to shut the door on those products.
One thing about that, I will say, when you see a product close and you look at the market and you're like, well, because the market's been down 4 or 5 years, I almost feel like that's a signal to buy because China just went on a tear. So this thing, and, you know, Athanasios and I have these different framings for things. And there is this sort of group of ETFs that seem to like, they liquidate right before their number comes up.
We've talked about this before.
We can't find a metaphor for it. Somebody said, leaving the movie right before the good part happens. Or, you know, sometimes they get recycled. We call that the Lazarus list. But there is a group like the short squeeze ETF liquidating like 3 months before the GameStop stuff. It happens occasionally. If that China healthcare ETF were around, I bet it gets a couple bites because there is a feeding frenzy in China right now. So it's interesting looking through these for maybe buy signals.
Yeah, I think there's a need for, I think there's demand for China ETFs, and KWeb certainly is shown that there's success in a targeted China ETF. I didn't list it here. I don't have the ticker, but there's a China utility ETF. I don't think the American investor is going to be moving into that one anytime soon. So what's interesting to me is sometimes we'll see a firm just decide we're going to cut the whole suite as opposed to just pulling out an individual one. And I think that's certainly the case with Global X.
Can I bring up one other Global X that closed, which is interesting, which was the Nigeria ETF? So this ETF, I have a long history with this fund. First of all, I always just thought, wow, this is how far ETFs can go. They can get you Nigeria. It was like, wow, you get anything with an ETF. And then over the years, like when I joined BI, they were like, oh, do some more modeling and stuff. Like, so I was like, all right. So I would have this report where I would look at ETFs by lowest price to earnings ratio to be like, hey, it's got a low PE. Maybe it's a good buy. And this is how I learned the hard way that like a low PE doesn't necessarily mean it's a good buy. So the Nigeria ETF would always be lowest. It would have a PE of like 4, right? Like that's like the S&P is like what, 25?
Yeah.
So you're like, so I was like, oh, maybe the Nigeria, and it would go to 3. So this Nigeria ETF is such a great lesson in like, no matter how low you think the basement is, there could be like a cellar door to that too.
And
like it never ends.
With skeletons in
But
it?
nobody
Yeah.
ever bought the ETF. I mean,
I know.
other people might have seen
Because
that
it never went
discount.
on a run.
Right.
It never got out of the basement. It only went to another basement.
I'm trying to make a Halloween joke here.
I know.
I know. I'm
I'm-
trying.
There's skeletons
can someone,
in there. Yeah,
I'm throwing out
There's
so
also
much
just
stuff for you guys.
There's a classification. There's like the tomb, and then there's the headstone. You know, we could have some more fun with this. Okay, Todd, run it out. What's your last observation?
All right. Well, my
Well,
last
there'll be more, I'm sure, but
Yeah.
the last one
well,
that you're going to
the,
talk
the
about.
last one I just want to highlight is the ticker is Journey, JRNY. It's the Alps Global Travel Beneficiaries ETF. Because VettaFi is actually was the index provider behind it. And
way to make this about yourself.
well, I'm not making it about myself. I'm in the Bloomberg office. I imagine that we're going to hear about some Bloomberg index-based products.
No, they're all really great. They're all really good.
None of them have ever.
I
gone
love
to the
that you
graveyard.
think we're gonna like subtly promote all of our own stuff.
Yeah.
Well, the reason this caught my eye was I think we were on together in the past talking about jets. So the Jets ETF, which soared in demand around just as the pandemic was happening, it was a $3 billion ETF. It's now a $1 billion ETF. We just haven't seen demand for travel-related ETFs. Journey just didn't survive, despite having exposure to airlines and other travel-related areas. And so I don't think people know of VettaFi as an index provider. So figured I'd shout it out that we lost one of our children earlier this year.
Journey may be gone, but don't stop believing.
I was going to say there's a travel version.
Does
of that,
anybody
there's the music
not
version
think
that.
of a Journey song when they see that ticker? It's like
I was going to say maybe it was
Yeah.
the wrong ticker because people were associating it with music.
And we now have those.
it's
ETFs.
also
Yeah.
honestly like there's 5 or 6 of these travel. I mean, even the first one from Invesco probably doesn't have that much in assets. That's a tough sector.
Yeah, it's a narrow theme.
Okay, Vildana, take us through the graveyard with a flashlight. What did you find?
That's really good. I
Yeah.
like that. I tried to group them, as you guys did, into categories. So to continue Todd's, there's a bunch from the pandemic that closed that were really emblematic of the pandemic. So you mentioned the work from home fund, Eric. That's IWFH, I work from home maybe. But the I, because it's iShares, it only got like $2.9 million. So I don't know, just interesting to see, especially an iShares fund close, and they did have a couple closures. GERM, GERM, Amplify Treatments, Testing, and Advancements ETF, also only got like $10 million. And then last year, at the end of last year, we had mRNA close, I think. So just, the pandemic
interesting.
era is really
It's-
over.
It's over. Yeah.
it's done.
I like
PSA,
Germ.
get a booster.
Germ was during COVID. Germ had the most hardcore vaccine type companies. What was the other one that was competing with Germ that they put out and it was all full of it had like Netflix in it, Bug or something. Somebody else put out one that was like
Yeah, Germ was Pacer, right?
no Amplify.
Amplify. Then Pacer had one, but I forgot the ticker.
Pacer had one and it had it was very it was called the virus VIRS. So it's interesting. These are great 1-2 study with how to make sure to do your homework. VIRS was broad. It was hey, let's put Netflix in there because more people will be home watching Netflix. That's a stretch, right? Germ was hardcore, and it gave Moderno and some of these companies that weren't quite a big weighting. And I actually thought it was the perfect ETF to play the COVID and the sort of medical response. But VIRS got a little more of the assets. Now they're both liquidated. Neither of them could turn that whole pandemic into success. And even the work from home, by the way, WFH, which was the original, that has 24 million. So
How much?
almost everything pandemic related just gone.
Rear view mirror. Good
You
one.
just said I like Germ. Is that? I'm still thrown by the fact of
I'll be honest with you, I do like germs. I'm a fan of putting, being natural out there, letting the germs come into your system and giving your immune system practice.
eat a
So in a
little
way,
dirt.
I do like germs.
Okay. I've been fighting a cough for a little while. Would you like a sip of my soda?
I'm not that hardcore, but I generally am open to germs.
All right,
This
Vildana.
is fascinating. All right. My second category is I tried to look for the same issuer liquidating funds, and Sofi had 5 liquidate, and all of them had really, really good tickers. BYOB, Be Your Own Boss ETF, which is a gig economy ETF. ENRG, which is smart energy. TWeb, which is Web3. Weekly, WKLY, was a weekly dividend ETF, and TGIF, a weekly income ETF. And all of those, I mean, they just had
Those are great tickers.
such good tickers, very little money in them. So
What do you think
Goodbye
happened
to
there, Eric?
those.
Was it just clearing house? Just like, let's look at the bottom of the barrel and close up shop?
Well, I'm looking here, and it doesn't look like, look, if you're a thematic ETF, a cute ETF, you need 2 things to happen to get assets. You need a shiny object moment. I don't think any of these really went to the stratosphere. The second thing you need is when everybody's looking at you in the sky like a shooting star, they got to think, oh, yeah, I know a guy did this, or I saw a video of a robot doing a somersault. This must be real. You can need the imagination to lock in with the price. And I don't think any of these had either of those. I mean, Be Your Own Boss, gig economy. I mean, maybe there's a little of that. Like, I've seen some people, but like, that's why I think AI and robotics is the most powerful theme right now, because it does have these nice pops. And everybody has starting to see AI touch their lives or videos of stuff. And those 2 things together, I think, are a powerful combination for a theme. If you don't have both of those, or at least one of those, you're probably going to fail.
I just think they didn't commit to they still haven't committed to the ETF space so far. I mean, they've have a brokerage platform that appeals to a younger investor base, but that's all. I think their efforts are to try to tap into that base as opposed to fully embracing the ETF community and the marketing efforts that are needed to have distribution.
On the flip, their SoFi Select 500 has about $1 billion. And I agree, they're not out there that much, but the SoFi 500 is a much more like broad appealing fund versus like the Be Your Own Boss. And BYOB, by the way, is not known for Be Your Own Boss, it's known for Bring Your Own Beer. That's a whole nother issue with that.
One thing I was going to add about Vildana's picks that I love how opportunistic the industry is, right? So work from home ETFs, trade war ETFs, Mag 7 ETFs. But you got to be careful with that because once that trade fades, there's this risk of closure. But I love that they can jump on an idea really quickly.
Yeah, and this brings me up to K-pop. So K-pop is not on the list, but in our team chat, we troll Ethan constantly because just the fact that K-pop still exists bothers him. He thinks it should have been gone by now. It's down like 70% since it launched or something crazy. It's got no assets, and it just keeps going. I think we interviewed the guy who started. This is not his main thing. He's off doing all this. I think he just forgot he launched it, and it exists to bother him. Well, maybe, and I love that.
Maybe next year, Ethan. Vildana, bring us home. What was your last?
One more set from the same issuer, and it's Subversive Capital. So you guys already mentioned LGLZ, the cannabis ETF, but they closed a bunch of other ones. KCAL, KCAL, which is food security. SANE, really good ticker, SANE. It's the mental health ETF, the legalized, and then DKRB, which was a decarbonization ETF. They charged a lot, all of them, and just garnered just so little in assets, like $500,000 per. So those are really interesting because Subversive has 2 other congressional trade tracker ETFs, Cruise and Nance, KRUZ and NANC. Those have flows, and NANC is actually beating the S&P 500 this year, which is really interesting. So those are still going. Just I guess these 4 couldn't really garner attention.
Interesting. All right, Vildana, for your efforts, you get a Kit Kat, which is
thank you so much.
Your favorite of those options
Yes,
that
you.
Todd gave you. Again, thank you,
Todd
Todd.
apparently didn't get his own candy.
Todd gets a Reese's.
I'm going to give it to Athanasios after this.
Okay, Athanasios,
Thank you.
you got some stuff to show us with a flashlight in the graveyard?
Yeah, I do. But actually, these 2 robbed most of my ideas. But there's a couple. There's
Grave
still plenty.
robbed most
Grave
of
robbed.
your-
Yeah, that works.
Oh man, that's a dirty business, you know.
So Had a couple of those picks, but one we didn't talk about was cryptocurrency. So Vanek Ethereum futures, EFUT was the ticker. But I think this closed for a good reason. It's because Ethereum spot ETFs became live. So there's a better product, there's a better exposure to Ethereum. And so all the future-based ones had closed down. I think there was a Bitcoin strategy one they also had that closed as well. But this one is just a byproduct that a better product had come along and replaced it.
So basically, you're telling Eric that the crypto theme really didn't work in 2024.
You know, if you look at it that way, we could use that.
It's too weak of a troll.
It's too weak. There's too much of
He's so much better.
I used to troll him, but I just gave up. I was like, I'm too tired.
But the Bitcoin ETFs, they have billions of inflows.
Listen, when there's ETF closures within an industry, that's a sign that it's at the top, right? Isn't that how this works?
In that case, that thing got rolled over by all the new ones, which were giving you direct. Look, in an ETF, in the ETF world, if you can give it to somebody direct, physically backed, they're going to choose that. They want the real thing. Nobody wants indirect ways of getting exposure generally.
You're being too calm about this. I'm trying to get you to...
It's too weak of a troll. He's done better.
No, but it's to your point that once investors want the real thing, so once a better product comes along, they will naturally just go over to that.
All right, Ethan, what else you got?
All right, I was going to mix this one up. Can I pick one that hasn't died but has its tombstone picked out already? Because it's going to close.
We already talked about K-pop.
No, this is another one.
No.
This is it already has a closure date now. So it's FM, which is the iShares Frontier Markets ETF. They announced that they're going to close. They said maybe early next year. And this one's pretty interesting because it had about $400 million in assets. So it's pretty odd to see an ETF that large close. So we kind of looked at why are they closing, and it's Frontier Markets, so it's very kind of small liquid markets. It was actually problematic for them to run it. So they decided that it wasn't worth running it if they couldn't do it efficiently, so they're starting to unwind it. If anyone does have it, just keep in mind, like, it's pretty much just holding cash now, so it's just slowly sort of unwinding itself, but that's something that is going to close. They don't know officially, but they said sometime in the first quarter.
So we lost Nigeria, and we're about to lose Frontier Markets. Was Nigeria part of the Frontier Markets?
Yeah, I don't remember, but I think it is in that category.
But we still have Vietnamese ETFs.
And I think Portugal closed too.
There's still the VanEck Vietnam ETF that is a Frontier Market, I think.
Honestly, FM went on a tear like 7 or 8 years ago. I like it because it's all these countries that are, it's almost like investing in like, I don't know, AA baseball players or something, because they got to go to emerging markets. And when they get picked to come up, their country goes up big time. And this is where it would catch it. You don't get it after. You get it when it's in FM. I think iShares was just reviewing, and it was just too painful. Because I called them, and then it's funny, someone was interested in like buying it from them and basically like restarting it. But they were like, nah, we're just, we don't want to, we're closing it because we think it's bad for the public, not because of financial reasons. So they don't want to have anything to do with it. But I do think this is a not bad Lazarus list potential.
Well, it's got to close first, so keep an eye on it. I had another iShares one that kind of caught my eye that I wanted to ask you about, Eric, which was IAUF, which was the iShares Gold ETF. Like, it's really shocking that, gold is totally on a tear this year, and then one of the biggest names in ETFs decides to close it down. And I wanted to ask what you made of that.
Oh, I see. This, correct me if I'm wrong, Todd or Ethan, but this is a gold strategy. I believe they were trying to use the futures curve and pick out the right futures at the right time or something.
So pretty technical.
Yeah. Nobody, again, if you have a commodity where you can physically store it, no problem, nobody's going to pick the futures. So that's my take. You got it. Am I wrong there?
I think that's the case, but they still have very popular IAU that's seen a lot of inflows, and I think they have a lower cost version that the ticker's failing me at the moment. IAUM maybe
something like that. Yeah,
it's their GLDM version that has seen a lot of success.
It is IAUM.
Hey, look at that.
Yeah,
look at that. When you stroll by the graveyard, you pick up a couple of ideas along the way. So iShares is still committed to the gold space, just not into the future side.
All right.
IAUM, $1.4 billion. They grow up so fast.
They grow up fast.
Or they liquidate.
Which is why we're here. Ethan, you get a Hershey's for your efforts today. All right, Eric, bring us home. What else jumped out at you?
Okay, microsectors U.S. big oil 3X. At the time this came out, it was, I think, the most volatile ETN. It was an ETN ever introduced. It had $2 billion. So I asked Mike Eschman over at MicroStrategies, like, hey, what's going on here? You got a huge hit on your hands. Why would you close it? He said, look, the size and concentrated nature of the basket made it difficult to hedge. So they have OILU, which is a bit more diversified. So they as Ethan kind of calls it, flew too close to the sun. I think there is a point where it's just too much, too far away from home. And this one was, and that's tough to give up. But they were probably hearing it from the ecosystem. Hey, man, we cannot make a market in this, and we're not. And you can't leave your ETF out there without market makers interested in working with it. So that one stuck out to me.
It's the first ETN we've talked about. I mean, which shows you how much the industry is. We talk about exchange-traded products, but it's mostly exchange-traded funds. And most of these that we're talking about are so tiny, certainly less than 100 million, except for the FM one, which hasn't yet closed. So calling it a little bit early.
Death Watch.
Yes.
Yeah.
Okay, another one. The Alpha Dog ETF.
What's
Great.
that?
Ticker RUFF.
I mean,
RUFF.
There's some incredible tickers in this list.
So I don't totally know who was behind this. I remember when it launched, and I was like, kind of a cool, memorable, it just hits quickly, and you get it. This is someone going out and being a dog for Alpha.
What did Alpha Dog hold?
So here's what it says. It invested primarily in large and mid-cap securities. So it was just an active fund coming to the market. Now, sounds like Indy. I don't think it was connected to any bigger firm, but here's the problem. It was 90 basis points. And it launched in October 2021, right before the SHIT hit the fan, which was 2022 when the Fed raised rates. And so this thing launched right into a buzzsaw. And if your game is just alpha, it's hard to launch into a buzzsaw. Like a theme ETF can launch, go down, and then come back up and still have the shiny object moment. But so bad timing, high fee, Indy wasn't meant to last. But that said, I remember it filing and I remember it launching because it actually broke through the clutter with that name. So
Rough.
It's rough out there.
Yeah, it got put down.
Okay, what else you got?
This is Pet Cemetery stuff.
Zing. Oh man.
But we still have
Good movie, by the way.
We still have S Dog and I Dog.
We do. A lot of dogs left.
Pause.
Eric found the corner of the cemetery that nobody really wanted to touch, and he took us there. Okay.
Okay. I got to pick this one. What is it? He knows.
It's got to be an ESG fund.
Well, I have one of those, but okay, yeah. So I'll go there. The Wisdom Tree ESG Fund, RESP. And look, Wisdom Tree isn't really into this. I mean, let's just face it. There's a couple firms that are really into ESG, and I think they'll carry on. You got to really be into it. That's not their thing. Like a currency hedge ETF, Wisdom Tree is really into. They're going to keep those open. It's the Johnny-come-latelys that'll close. In fact, there was a currency hedge ETF from iShares Hedge Germany, which closed because that's not really their thing. So if it's not your thing and you launch late, you're just going to close it. And speaking of these ESG closures, I was predicted there would be a bunch of closures. So I bet Todd, and I was right, but I was 1 year early. So he ended up winning that one technically.
So I ate a steak, technically.
You did.
You paid for.
You did.
Technically.
Yeah, no, you did.
That's
I was
how
early.
we phrase it.
I got a little excited with this prediction, but it ended up being right. Now, you know what they're doing now? They're taking ESG and just kicking it out of the name. So they're going to keep the fund around and just move ESG. ESG is almost borderline radioactive. It's become not just profitable. I think if you're a wholesaler and you show up to an advisor in Nebraska or Texas or anywhere, I don't think the advisor now wants to have the client react to ESG in the fund. It's got too much baggage. So this is a real problem they have. The hardcore hippie types are going to seek this out and buy it. So there will be a small niche, but outside of that, all these Johnny-come-lately and tourist ESG issuers, they're going to close these funds. So not shocked there. No, the one I wanted to pick, the one on the list that really hurts, Inverse Jim Cramer. S-Jim. Now listen, remember I predicted, or I even recommended to the industry they should launch this. Matt Tuttle did it. God bless him. He launches, all kinds of stuff. And he even tracked Cramer's picks. The problem with this ETF wasn't the idea. It was the execution. This ETF is designed to go long his short picks and short his long picks. Makes sense. The problem is then you have a long short portfolio. So every day they mostly offset. So the movement in the fund was very low vol. It could never get a shiny object moment. What he should have done is had two ETFs, long his shorts, that done, and short his longs. Because I'm telling you, this guy is spectacularly wrong on a regular basis. All you need is a couple of those grand slams, and one of these would have had that shiny object moment. This was designed wrong, and I think if Tuttle were here, he would agree. But maybe they'll try it again.
Another Lazarus list candidate.
Oh no way! I mean, it was a gimmick that failed.
I just told you it was designed wrong, though.
And but it got no money because people like
because
to
it could
shout.
never go.
People like to shout at the TV when something goes wrong. People don't want to put their money in to a gimmick.
Okay.
It was a gimmick. And if I can go back for a second, they're pulling ESG off of the name because the regulators are requiring that they have ESG in the name, that it fits certain subjective criteria in terms of what the SEC says. So we're seeing names come off for ESG because the fund can't operate with ESG in the name. It isn't because, what do you call it, hippies from where? That isn't the reason behind it.
Way to critique that one.
Okay, are the regulators also why the outflows are coming in too?
Well,
the regulators do that too?
The fund's closed. So that's what we're talking about.
So
the fund's closed. The names didn't change for that reason.
Look, I think Todd's bitter about nobody really liking his candy selection.
Oh, no, I'm happy with it. Thank you very much.
You're happy with your own candy. That's the goal, is like when you put the candy bowl out and nobody likes the candy and you get to keep it all?
All right, just a couple other ones quickly. The Arrow Reverse Cap 500, YPS, which is SPY backwards. This took the S&P and just reversed weighted it. It's like your market cap weight, we get Mag 7 at the top, equal weighted, everybody's 2%. Or this, which is everything is reversed. So the bottom of the S&P has the biggest weighting. So honestly, it's a lot of mid-caps. Sometimes mid-caps have a run. This thing was just very novel, and I remember Phil, back when he used to run it, had used the reverse card, the Uno card. I thought that was kind of cool marketing, and the ticker was good, but innovative idea. Wasn't meant to be. It gave it a good, 5 or 6 years.
Is there anything that could perform worse than the opposite of the
I know.
Mag?
That's
7?
like I said,
not this time around.
And then here I've got Innovator Triple Stacker January.
The word innovator, I see it multiple times on this list, at least 3. What's up with the one that you picked?
Well, Innovator in this case is the name of the company versus, say,
go.
the Direction Moonshot Innovators, which is more of a Cathie Wood type ETF that didn't work out. But this one is, what caught me about this one, I've always loved the triple stacker, which makes me think of like a Denny's breakfast item. Hey, I'll take the triple stacker, sunny side up, wheat toast, thank you.
But it didn't work out here.
It didn't work out. It wasn't I don't know, it just wasn't the right thing. Now, Innovator, to their credit, they've innovated quite a bit, and they've really introduced the buffer. They created that category. First Trust has actually taken in more flows this year than them, but they're doing fine. This one didn't work out. And then finally, the Procure Disaster Recovery ETF, FEMA. This was from Andrew Chanin, who really was behind the famous hack. Went to a new firm, put his all into this.
He still has UFO.
He still has UFO. But this one, especially after the hurricanes, thought it might have had a nice little run, but it couldn't really get going. So I bet someone Lazarus lists this one, Disaster Recovery. We'll see. And then another one I got to throw in there, iShares Pakistan. I know we went over single countries. I thought that one would find a market just because it was so volatile and could really provide a lot of juice. But like I said, international across the board had a tough time because the U.S. just dominated so much.
All right. Well, this was another great year through the graveyard, and want to thank Todd, Vildana, and Athanasios for joining us on this episode of Trillions.
Thanks for having us again.
Thanks for having us.
Thanks for the Twizzlers.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. We're on Twitter. I'm at Joel Weber Show. He's at Eric Balchunas. This episode of Trillions was produced by Magnus Hendrickson. Bye.